cattle inventories are basically peaking. We're kind of at a plateau. I'm going to call it a plateau rather than a peak because I don't think we're necessarily going anywhere from where we are. But we're there, and I'll show you the numbers here in just a little bit. Beef production has grown a lot in the last 4 years, and will continue to grow, but it's growing at a more slow pace. So cattle numbers peak with about a 2-year delay. Beef production will peak. Beef demand has been a real key to our markets the last couple of years. When we get into our price outlook, we've added a lot of cattle numbers. We've added a lot of beef in the last 3 or 4 years, and yet we've actually held prices very steady the last 3 years. And so, demand has been a key to offset that increased supply. And all of that said, sort of the bottom line in the cattle industry is that we're in pretty good shape in terms of everything kind of being in balance. In fact, we're not only in balance, but we're kind of at a stable level where we can just kind of continue. And we don't often see that in the cattle industry. But I think we're kind of at that point for now, until something changes. The things that are most likely to change would be these external threats. We're still watching a lot of issues, macroeconomic issues and trade issues. There's a ton of things out there. Most of them are not having huge impacts directly on cattle markets. Certainly they're having some impacts in agricultural markets, more broadly in some cases. But most of the impacts that are out there are already kind of baked into the market. There's still a fair amount of uncertainty over some of these issues, and that's not a good thing. It's actually an impact on the market, but we've got a lot of things to resolve. We don't have the new version of NAFTA, the USMCA, in place yet. The ability to get that in place is probably going to depend on what the U.S. decides to do with the steel and aluminum tariffs. TPP, which we pulled out of 2 years ago, continues on without us. And, and again, that means that as time goes on, if nothing else changes, we lose ground relative to those other folks in the TPP, in particular for markets like Japan. We're talking about doing a bilateral agreement with Japan, but we're just starting that process, so it's many months away. If it happens. Obviously, we're still trying to solve a lot of issues with China. And again, we've never had a beef market presence in China to speak of. And right now, we're just not making any progress on that. We're losing opportunity to get bigger in China, and we're going to want to do that. The EU and Brexit, as you're probably well aware from the news recently, they can't decide if and how they're going to finalize their divorce. And so, again, there's potential there for a number of at least indirect, if not direct effects. So there's lots of issues out there that could have an impact. They're not necessarily right now, but that's the place that things that would shock the beef industry for the foreseeable future would come from. It'll be those big picture things. And so all you can really do is watch the news and then, depending on what happens, you may have to react in some way. But right now, I don't think you do anything different than what you're inclined to do. If we take a quick look at these cattle markets, kind of bring us up to date. First few weeks of this year, for the most part, cattle markets are following seasonal patterns, and I'll show you the actual calculated seasonal indices here in just a second. These calf prices have increased through the first quarter. Typically, we're near a peak about now. I think we might actually, we could go a little bit higher yet. I think there's still some grass demand to be had for these lightweight calves. We've been wet and sloppy a lot this winter, and we're probably really just now getting ready to take on some summer cattle. So I think there's probably potential for a little more demand on these lightweight calves. The bigger feeder cattle typically actually go sideways to a little bit lower to a February or March low, and we've kind of done that. And we're probably set to see them take off. Let me show you these seasonal price patterns. So that's the typical for 4 and 5 weight steers in Oklahoma, and heifers too. They have the same pattern. That's what you would typically expect to see. So we normally peak in March. We go up from January through March through the first quarter, peak out, and then work our way lower. And then, of course, we have a fairly pronounced seasonal low, typically in October when we get our fall run of calves. So that's what you sort of expect. And again, we're sort of seeing that pretty much across the board. As you go up in weight class here, feeder cattle markets have a different seasonal pattern. And so this is something that obviously if you're a stocker producer or if you're retaining your calves, you probably already know this, but you recognize that those seasonal patterns don't look the same. So at a 6 weight, they do go up through the first quarter, but then they actually continue on and go up a little higher typically for a summer peak. When you get to the big end, the 7 and 8 weights, again, they're at about a low right now. I don't know if you can see this or not. We're at about a seasonal low right now, and they'll start grinding their way higher to a late summer peak on these 7 and 8 weight steers. So those seasonal patterns depend on the weight class, and obviously that can impact what you're looking at if you're marketing cattle of different weights at different times of the year. Fed cattle market typically goes up through the first quarter to a peak about now, and it has done that. It's been kind of a slow grind. We started the year at around 123. We got up as high as about 128. We may or may not be done. I can't say for sure. The seasonal pattern looks like this. Again, it's almost a little like the calf seasonal pattern. We go up to a peak about April, and then we work our way lower. Typically around Labor Day is the seasonal low. I think we have another chance here for these fed cattle, possibly to take a little bit more of a run. We've had lots of weather issues that have impacted particularly the fed cattle markets, at least in terms of immediate impacts. And so we've had some cattle that have been delayed in marketing just because it's been cold and wet and they've gone off feed. It takes them longer to finish. Carcass weights are coming in lighter. I'll talk about that relative to beef production in just a few minutes. We've had some decrease in supply relative to what we earlier expected because of the winter weather. And we're not out of that yet. There's still a lot of snow and ice to melt and dry up north that's impacting particularly the crop stuff. The floods per se that you're hearing lots about these days, there are a few cattle caught in that, but I'm going to say relatively few. Most of the flood issues really relate to the crop side in terms of, first of all, there's a lot of stored grain. There was a lot of corn and soybeans in bins that got flooded. That's all destroyed. It has to be destroyed. And then transportation systems are all disrupted right now. Highways, rail, the river, all of that is messed up. And then of course, we got about a month left for corn acres to get planted. And if it doesn't happen in that time frame, then we're going to see some shifts in acreage relative to what people intended to do relative to corn. So there's lots of issues up there on that side. Now you're probably hearing there's been some numbers the last couple of days on cattle losses. Certainly there have been some losses. These are very big impacts on particular operations in many cases. I've seen some really big outlandish numbers, and I'm going to call them that because I think there's just no way that the numbers can be anywhere near that big. And so when it's all said and done, I'm not sure that we'll see a lot of market impacts, particularly directly from the floods, but certainly lots of impacts to operations and so on. Now again, there are some broader weather impacts that we're seeing primarily in the fed cattle markets. Closer to the consumer, we get to wholesale beef levels, box beef. It has gone up through the beginning of the year. Pretty typical seasonal pattern again. It typically peaks out about May and then will be a little bit lower in the second half of the year. The one market that's been probably the biggest challenge of all for the last 8 or 9 months has been this cull cow market. Cull cows typically do increase through the first quarter, and then they stay high through the summer, and then they drop off to a fall peak, and I'll show you that in just a second. Last year, the second half of the year was pretty abysmal on these cull cow prices. They dropped much sooner than expected and just kind of stayed there, and they started this year at a low level. This was a little head fake just to mess up guys like me. It looked like we were taking off on our seasonal run about the end of January and February, and then it didn't, and now it's kind of done it again. So we may be getting part of our seasonal increase. Here's the normal seasonal pattern for these cull cows. So they typically go up pretty sharply from the November low through January, February, and March, and then they actually peak about May or June, but they stay pretty high at a kind of a high level here seasonally through the summer and then drop off again to that fall low. So maybe we're seeing a little recovery there. Cull cow markets are driven largely by the market for processing beef. The cull cow or the cutter cow box beef market is showing a little bit of recovery here. It was horrible last fall. And so again, we have some chance to see a little bit more strength in these cull cow prices, and maybe something a little closer to a seasonal pattern as we go forward. I think for the first time in probably at least a decade, I don't have a drought map in my presentation. And that's a nice thing. It doesn't happen anymore very often. It seems like that I don't need a drought map either for us or for somewhere in the country. In fact, this morning's drought monitor map came out. There is nowhere in the U.S. right now that is in any of either of the worst two drought categories. And that's the first time in many years that somewhere in the country, now there's still some relatively dry areas in the Four Corners region, the Southwest, and so on. But by and large, if we've got problems of that nature in the U.S., it's too much moisture. And you've all had a long, sloppy winter. I know you're probably got moss between your toes, but it's, and you know, the good side of it is having gotten through the winter now, these are from a couple days ago, 4-inch and 32-inch plant available water maps for Oklahoma, and the take-home message there is we got lots of moisture. We're going to be off to a good start from a forage standpoint. We're going to grow a bunch of forage, at least through the first half of the year. Now, you all know this is Oklahoma, so by July we could be hurting. But, you know, if you get the first half of the year, you can weather what happens in the second half of the year. The droughts that get us in trouble most of the time are the ones where we start dry and we never get any growth. So we're off to the races here in terms of moisture conditions. We're going to see some good potential here. Here's the flood map. I talked about the floods a little bit already. This is, it's a big deal, obviously, for the folks affected. It's in a relatively small area. Droughts or floods are a little bit like tornadoes. The odds of it hitting you is not very high, but if they do, they're particularly devastating. And they're certainly seeing that, and there's more to come. Again, there's still a lot of water to come down the Missouri River's shed and the Mississippi and the Platte River areas. And so there's going to be flooding issues well into the summer, or residual impacts at least from the worst of the floods, probably well into the summer. And again, it's likely to impact crop markets more so than cattle markets. It did hit during calving season, so cow-calf guys that happen to be in the flooded areas, I'm sure we're losing some calves. Cows are pretty good. They can find high ground and kind of take care of themselves for quite a few days, and at least in a flood they've got water to drink, at least in this flood, as opposed to a coastal flood. So, but again, we don't know the numbers of losses. There have been losses, but I think they're probably not the kind of thing that will impact the market broadly as much. Certainly they will impact lots of individual operations. Okay, January 1, we got our numbers about a month late because of the government shutdown, but we finally got them the end of February. So we got 94.8 million head of cattle in the country. That was 0.5% more. 31.8 million beef cows. That was up 1%. Beef replacement heifers were down 3%. I'll show you the implications of that in terms of future growth here in just a minute. Feeder supply was up 1%. So again, we've got lots of calves in the pipeline for this year, and with a herd that's up 1% January 1, that means we'll have another calf crop that's at least as big as last year, probably a little bigger. So we will continue that into 2020 as well. Cattle on feed is up 1.6%. The calf crop was up 1.8%. So, we're still in growth mode. We're still in expansion mode. We started growing the cow herd in 2014, but it's slowing down. And I'll show you a couple charts. There's a long-term picture of cattle numbers, just kind of for general interest. If we focus on just the last 65 years or so, here's beef cow numbers. So here's what we're looking at now. The last time we did what we were doing now was in the early 1990s. And here's another way to look at it. You can see the percent change in the herd. Typically you got 5 or 6 years of expansion. Then you'll have some liquidation. This was an attempted expansion that didn't work. More liquidation, and then here we are now. Recovering from that. So here's one last picture of those numbers in a different way. We're up here at almost 32 million beef cows, 31.8, and I described this earlier as a plateau, not a peak. The cattle industry has a long history of cycles. We get big and we get too much, and then we get low prices, and then we do less because the market beats us up till we quit doing what we're doing. And the one thing that's different this time from a historical standpoint is we're not facing liquidation. We have not gone too far. We are honing in on a peak here or a plateau, but we are not set up for any inevitable liquidation at this point. And I think there's several reasons for that. I won't go into the whole story, but one thing to keep in mind is this red dotted line shows you where in the last cattle cycle, where we were on January 1 of 2011. And then we had the drought and we lost another 2 million beef cows below that level. And so the first 2 million head of regrowth was really just drought recovery, if you want to think of it that way. And so the net herd expansion above where we were in 2011, which was when the drought started, is only about 800,000 head of cows. And I think that's one of the reasons it looks bigger than it is in terms of the amount of numbers we've added, but part of that was just getting back to where we would have been and planned to be without the drought. So in Oklahoma, 5.3 million head of cows, 2.15 million beef cows. Currently that makes us the number 2 beef cow in the state in the country. Our replacement heifers were down 2.4%, much like the national numbers. Feeder supply is bigger. Calf crop was a lot bigger year over year. So, you know, we're generally following the national trends. The replacement heifers nationally, you know, when we're expanding, we're saving more heifers. We stopped that in 2017. We've been dropping the last 2 years, so we're slowing down herd expansion. We're not liquidating yet, but we're slowing it down. If you look at it as percent of the herd, it's the same idea, but the heifers as a percent of the number of beef cows, we peaked again in 2016 actually, as a percent, and we've been working our way back down. So, you know, when the heifer retention is slowing down and the cow culling is going up, that means that we're slowing down expansion. But we're not in liquidation mode, and we don't need to be in liquidation mode. There's no indication that we'll go into that. We're just at a kind of a steady state. I really think for 2019, we'll probably see virtually no cow herd growth, plus or minus 0. I think in my big spreadsheet that I crank all my numbers through, I'm carrying 0.25% of beef cow herd growth this year. And I may change that as we go through the year, watching the slaughter numbers and so on. But essentially no growth here in 2019. Feeder supplies, there again you can see they're up a little bit relative to last year. Oh, here's the chart I thought was wasn't in there. The red line on this scale is the national beef cow herd numbers. So there's all that liquidation and then the expansion since 2014. Here's what we did in Oklahoma. We were actually getting bigger relative to the national numbers. Then we had the drought, and then we've jumped right back up here, and we've just basically picked up that path again. So we've seen remarkable growth. We actually bottomed in 2013 in Oklahoma. The national numbers didn't bottom until 2014, and we've recovered a tremendous amount of our herd since then. Okay, so all of that said with the cattle inventory numbers, feedlot situation, again, I'll summarize this in a minute. As far as the last cattle on feed report, came in with bigger than expected placements. They were about 2% higher than a year ago. Most analysts thought they'd actually come in below last year. But that was 1 month out of the last, I think the 5 prior months to that, we'd seen a year-over-year decrease in placements. And so if you look at 2 or 3 months averaged together, placements are starting to decrease on a year-over-year basis. So we've probably come close to peaking out these feedlot inventories. Marketings are still pretty strong. They were even with last year, as expected. And so the March 1 cattle on feed inventory was less than 1% higher than a year ago. It was 100.7% of last year's number. So once again, you know, we're still adding a little bit to cattle numbers in total, but we're working them through the system. We've done a good job of that. The black line up here is feedlot inventories averaged for the whole year. It's a 12-month moving average. So we're up here near a peak. The last time we were at these levels was about 2008 or 2007. And you know, compared to the low back here in about 2014, we're running about 11% more cattle through feedlots on an annual basis than we did at the low numbers here, the recent low in 2014. So the upshot of all of that is that we've significantly increased cattle numbers. We're about done with that, but feedlots have done a good job actually of moving those cattle through the system. And so we have not created wrecks. We have not seen weight problems since 2015 anyway. And so we've done a pretty good job. Cattle slaughter last year was up 2.6%. The year before that, it was up about 5%. So far this year, we're actually just barely up at all. Steers are down, heifers are up, beef cows are about flat. We expect when it's all said and done that cattle slaughter will be up about 1.5% this year. So still slightly bigger numbers, but about half or just a little more than half of last year's level of increase. The other part of beef production besides slaughter is carcass weights. Carcass weights were, for the whole year last year, if you average all those weeks out, steer carcass weights were up about 3 pounds last year. And that's not bad. They had dropped sharply the year before. One of my concerns all of last year was that we'd see carcass weights go up 6 or 8 pounds. That's a lot of beef when you multiply that times, 16 million head of steers or something like that. But they actually ended the year down. Of course, we've had weather problems so far this year, so they're running about 6 to 7 pounds below year-ago level so far this year. That is partly due to the weather. And so, if we don't see, and I don't foresee at this point, significant increases in these carcass weights, then again, we hold beef production increases to a pretty moderate level. So last year, beef production was up 2.6%. We're looking for, again, just a little more than half of that this year, maybe 1.5%. But we had more pork last year. We'll get more pork again this year. We had more chickens last year. We'll get more chicken, although this one we've been pulling that number down. Poultry production may actually wind up being closer to flat this year. But the bottom line is we had record meat supplies last year, and we're going to push that to another new record this year. So there's lots of meat out there. And that always worries us from a beef industry standpoint. We're growing probably the fastest, well, maybe not over pork, but there's lots of meat out there. It hasn't been a problem so far in terms of the demand challenges. We've maintained good, strong demand. I think I took the charts out that show beef relative to pork and poultry, beef retail prices, but they've stayed very strong. And then, of course, we've had the international stuff, which we'll get into next. So a quick global picture of the beef industry. On a global scale, the U.S. is the biggest beef producer in the world, followed by Brazil, the European Union, and China's next. India's number 5, and so on. Okay, so that's kind of, and that's basically been the pattern in terms of production for quite some time. Hasn't really changed a great deal. In terms of exports, Brazil is the largest exporting country, at least projected to be for 2019. It has been that in the past, but not every year. India's number 2. It was actually number 1 for about 3 years, but has dropped back a little bit in the last 2 or 3 years. Australia's number 3, and then the U.S. is number 4 as far as global, and then everybody else is kind of in a second tier down here. In terms of imports, on this chart, it shows the U.S. to continue to be the largest beef importing country, and we have been historically. Increasingly, you recognize that China, which has grown a lot in terms of official imports, and now you put Hong Kong with it, since it's back to being part of China, and we know part of the meat that goes through Hong Kong winds up in China. If you add this one to that one, China is the biggest beef importing country in the world. And that's important. From a global market standpoint, the other point that's important is that we don't have a share of that market to speak of. And we're missing out on that opportunity, and we're going to definitely want to be a part of that. This is likely to continue to grow. So here's where we do export to, and you can kind of see the pattern in recent years. I think I took the tables out. So Japan, Canada, Mexico, South Korea, and Hong Kong are the top 5 export markets. Japan's the biggest, South Korea is number 2, Mexico's number 3 right now, and Hong Kong and Canada are about the same level at the current time. Those do move around slightly at times. You can see the shares last year. So Japan's biggest, South Korea, Mexico, and then Hong Kong and Canada at about 10% each of our total exports. Exports were up in 2018, 10% year over year, total exports. The 2 years prior to that, they were up 12% each year. So we've seen a big increase in exports in recent years, which again has helped to absorb some of the increased beef production that we've had. On the importing side, Australia, New Zealand, Canada, Brazil, Uruguay, and Mexico are the top 6 export or import market sources of imports. And so we continue to do that. As you know, most of that imported meat, the majority of it is processing type beef. It's for ground beef production. And so, we still use that. These have dropped slightly. They've been basically flat for the last 3 years. They were essentially flat, 0.2% increase, I think, in imports last year. There's several reasons for that. Part of it is the growth in these other markets. So some of the Australian meat that at one time would have been more likely to come here is now going to China, places like that. The other part of it is that as we've grown our cow herd, we now have more cull slaughter, and that provides us with the lean meat that we start with. And so we don't necessarily need as much imported beef to supplement our lean meat supplies from our cull animals in the U.S. So we're projecting at this point, probably a decrease in imports, and exports will probably grow, but not as fast as they have in the last 2 or 3 years. Here's the shares. Canada right now is the biggest source. Historically, Australia has been, but they've got lots of problems internally as far as drought and floods in different parts of the country. New Zealand and Mexico, those 4 make up about 85% of our total imports. Byproduct values, I just put it up quickly to show you that one of the things that is a challenge in the markets is byproducts. I put it with the international section because most of this stuff gets exported. It's hides primarily, and that's where a lot of the weakness is. The hide market is very weak right now, but then we export tongues and livers and other byproducts, offal meats, and most of those go to international markets. Whoops. Imports, we do import some cattle from Canada and Mexico. It's more or less at level. We got a few more last year from Mexico. I forget what it was up, 9%. But, we're tied pretty closely together on the North American continent. Cattle imports from Canada is a mixture of feeder cattle and fed cattle. And so, again, no real changes there. Numbers, as far as we know, are relatively stable in all 3 countries. We don't have real good data, particularly from Mexico, but there's every indication that we're relatively stable in the North American continent. So, big picture price forecast. Again, for the last 3 years, we've been pretty flat, and that's basically what we're projecting going forward. In fact, by 2020, we could start to see these things improve a little bit. If we hold, if we flatten out the beef production here, get to the peak in it, which really won't happen until 2020 probably, or possibly 2021. But the growth is going to be pretty minimal the next couple of years. And so we were largely in a sideways market in 2018 on an annual average basis. We're projecting that for 2019 and really 2020. So lots of numbers here. And these are not worth very much because they'll probably change next week. But here's what I've got for today. We update these regularly as we get new information. But 2018 calf prices were actually about 3% higher than 2017 on average for the whole year. For 2019, annual average is flat. No change, possibly fractionally higher in 2020. Much the same for the big feeder cattle. 1.2% higher last year, maybe 2% less. 1 or 2% either way is not much of a change and going sideways. Fed cattle, again, they were down slightly last year, I guess, 3.6%. Flat to that this year, pretty flat to that going forward. So, again, bottom line, the beef industry is kind of on an even keel, perhaps the most stable environment within the beef industry with all of these conditions taken into account that I can think of or find in terms of the data probably ever in the history of this industry. We got no major imbalances. Sometimes things get out of whack in this industry and you just know things are going to change. They got to get fixed. We don't have any of that right now. So, we can continue on the current scale, which I think all in all is not too bad. Until something changes, and something will change that will either, I don't think it necessarily happens this year. It could, some of those big picture things, But I think 2019 is kind of a sideways year. 2020 could very well be as well. At some point in time, something's going to change, and we're going to either go back into expansion and see some growth in this industry, or something bad will happen, and we'll face some pressure and liquidate. I don't think we stay flat indefinitely, but the things that are going to cause it to change are things that we can't really identify at this point in time. It's going to be yet to come. To sort of see how that plays out. So that said, what did I do with my range? I think that's my last one. There's my email if you want to get a hold of me and chat more later, but do we have any questions right now? I'm saying this without the benefit of any sort of real analysis, nor even really checking the numbers, but and if you ask me what the population of Great Britain is, I can't tell you that, but it's not a very big number in the grand scheme of things. They get beef from, a lot of their beef production is produced in Scotland. That's still part of Great Britain, so that'll still be there. The thing they'll lose mostly will be Ireland. So it could have some impacts. There's potential for some, I'm going to call them relatively short-term disruptions if that happens. I don't know that it necessarily represents a lot of opportunity for us. Now we've been limited in the EU for many years now because of the hormone situation. And so I think some people are hoping that, well, if Great Britain breaks free, then we can negotiate a deal with them that gets us a little better access. I'm not sure that happens. It's not a given. It could happen, I suppose. But, I do know that their ag sector is extremely worried about the implications for them if this divorce goes through, particularly if they don't have a plan in place. And they don't have a plan, and they don't seem to be able to get a plan. I guess they've now got an extension from tomorrow till April 12th or something, but they haven't been able to come up with a plan in 3 years. I'm not sure what 3 weeks does for them. That hasn't happened yet. But there's some potential there, but honestly, when it's all said and done, I'm not sure it changes things that much for us relative to Great Britain or EU. We're also trying to negotiate a deal with them, but we haven't had much success at that either so far. I haven't actually looked at any real numbers lately, but I'm going to say pretty flat, I think. I guess fuel costs are running a little higher right now, but we've got the opportunity here for some much better forage situation probably. So I'm going to say, probably modest increase at most. I think the Kansas State data shows, what is it, $850 a cow, something like that, I think. And that's kind of full cost, everything. So some of that includes things that you don't actually write a check for, right? So most of us show profits when we calculate it that way. Feedlot cost of gain, in terms of feed supply, corn production and all of that, again, with all of this weather situation, it could change, but at this point in time, I don't foresee any major changes there. We've got ample corn supplies. We are slowly pulling down a fairly big carryover, but it's still pretty big. Now, if we go a month out and it's still really wet and sloppy, and all of a sudden we plant 2 or 2.5 million less acres of corn, and then we have summer weather problems where that doesn't make very well, and actually there's some potential for the flood residual impacts to lower corn yields, we could start to get tighter by the fall. So I'd keep an eye on it, but I don't see any real changes there. Obviously, we've got all-time record soybean carryover, so on the protein side, and we're not exporting any of that to China right now, or very little, and so there's a lot of that. So I don't see a lot of change happening on that side necessarily. We've also got fairly big stocks of wheat, so if we needed to feed wheat, we can, and there's some low-quality wheat around that's slowly getting used up. There's still piles of wheat from the 2016 crop, was it, or 2015? You can still drive around in western Oklahoma and find piles of wheat that have been there for 3 years, and they're not getting any fresher. So they're going to wind up, and they're feed wheat, that's why they're still sitting there. So we'll work our way through that. Nobody knows at this point, and it's still within the window, they'd like to be planning now They'd like to be mostly planted now with corn by late March in most of the corn growing areas. They'll tell you, and I've heard them say just recently, this morning I think, that they've got another 30 days, and then at that point they really reach crunch time where they've got to make a decision. I'm trying to think of what year it was. It wasn't 93. That was the last time we had floods about like what we've got now. This is going to compare to that, but somewhere a few years ago, we had fairly serious flooding, and we were very worried. We kept talking about we're going to not plant corn and all that. We got into the first part of May, and then all of a sudden it got ready, and in a week's time they put in a whole corn crop. And that's the situation with the technology we have, the farming technology we have. We can put a wheat crop in the ground in about 7 to 10 days in this country, if everything gets right. So it's got to get right, but we've got some time yet for that to still happen. Last year was probably the hardest year I've ever had to deal with trying to get a handle on forage conditions, because it was too dry at times and too wet at times, and we either didn't make it or we didn't get it up, or it wasn't very good when we did get it up, or whatever. And I've been asking all winter, and it's been a long, cold winter, so we've used up most of the hay, I think. You guys can tell me, but my guess is that my impression is that we're not carrying over a lot of hay stocks. So we need that. So yeah, if obviously, if we do have problems with this summer's hay crop, it could be an issue. We just have to wait and see. The good thing is we're going to at least start with good growing conditions, it looks like. We get some warm weather here and this stuff's going to really pop, and we're going to grow a lot, and then we just hope that we get the chances to harvest it. Last year was tough, and it varied all over the state. I could ask at one meeting, and they'd say, oh, hay supplies are tight, you can't buy it, what little is out there is in tight hands. I go to the next place, oh, we got lots of hay, no problem. And so I never really knew what the situation, it just depended on where you were. It was really regional, real spotty last year. But
I guess I need to call you if I have to, like this year.
we have to wait till I do a few extension meetings and I try to find out these things. It was hard to get it was really hard to get a beat on it last year. A lot of the hay that we did make was made in the fall, really. We finally got some rain in some areas that had been dry, and we grew a lot of hay. Some of it wasn't the best quality in the world. And so again, it would just depend on where you were. Some places made a bunch at the tail end and kind of got them through the winter anyway. Other places didn't have that, so. China, and I flashed past that chart pretty fast. I didn't even point out. Last year, mainland China officially represented 0.4% of our beef exports. So we've never sent very much there. We're not sending very much more. We won't send any more than that, first of all, as long as the tariffs are in place, because there are tariffs on that, which didn't take away something we had. It's just keeping us from getting any more. If we could get past that, so we get a trade deal in place, it's still going to be a slow process to develop that market, because that's a market we've never had. Typically, new markets don't happen fast. I can remember 25 years ago when we really first started sending beef to Mexico. And that started as a slow process, but it's turned into a really big market, and it's a pretty broad-based kind of thing. China will be the same way. Their preferences are different. The way they cook is different. We're not going to export a lot of steaks to China anytime soon, other than a little bit of hotel and restaurant stuff in Shanghai. I spent a month over there last year, and right after this meeting, I think, and last year. The nature of their cooking is that they're going to utilize different products, and so we're going to have to develop markets. It's going to take some time, but there's tremendous potential. I've told you the law of Chinese markets. You've heard this from me before, okay? 1.4 billion times any number is a big number. So we don't have to export a lot to them on a per capita basis to be a bunch of beef. And again, I didn't show you the chart that showed how much they've grown. 10 years ago, they were not a factor in global markets. They didn't import from anybody. And already they're number one when you add China and Hong Kong together, and we're not getting any share of that. It's all going to Australia, New Zealand, Brazil, and Uruguay, primarily, a little bit to Argentina. So we really need to get a piece of that action. But it's going to be a long investment in that market to get there. The Chinese have a major issue with African swine fever. There's no cure for that thing. When you get it, they're dead. Okay, that's why it's so devastating. They've got it in a big way. I heard this morning, of course, you're hearing numbers all over the place and you don't know what to believe. They put out some numbers officially and you still don't know what to believe. But I heard this morning that perhaps as much as 40% of their breeding sow herd may be gone. Now you got to understand that China alone produces half of the world's pork. So if they lose 40% of their breeding herd, that's 20% of the global ability of the whole planet to produce pork. So, now there's people running around expecting that necessarily means we're going to export a lot of pork to them because they're going to lose a lot. They are losing a lot. We will export more pork to them. I don't know yet that it will be as big as some people think it is. They'll make lots of other changes along the way too. And obviously they'll source pork from somewhere. The net effect of all that is it's going to help pork markets, either directly or indirectly. And that can help beef. That's going to help take more of that pork production offshore if we can increase exports. That takes some of the pressure domestically off of beef in terms of pork being a competing meat. So it's a positive. How big of a positive, I don't really know yet. But we certainly will keep an eye on it. They don't have it under control yet. Fortunately, we don't have it here. If it comes here, then we got a whole different set of issues to talk about. And so that's, the industry, the pork industry, of course, is trying to work very, very diligently along with the federal government to make sure we don't get it. But it's just a pretty scary situation.